That's what's really going to drive the price of Bitcoin up, is that people are going to stop being skeptical about it.
That timing was perfect. I started the recording early because I was like, hey, maybe I'll get this done a little bit earlier. And you hopped on right as one disappeared.
Oh, nice.
That was just brilliant. Your hair's looking immaculate right now.
Thank you. It goes back and forth between looking like horrible and good. Yeah.
You use product in it?
No.
I'm jealous.
Yeah.
Do you condition it?
But right after I wash it, it's like all bushy and terrible looking. So it's like when it looks nice, then I'm like, I shouldn't cut my hair. And then when it looks terrible, I'm like, I really need a haircut.
Does Emily have a say as to what your appearance looks like?
She doesn't. She does wish that she does. And she does want me to get a haircut. My boss also wants me to get a haircut, so I should probably get a haircut.
Just like transplant it all onto your face, so it's a beard, but
yeah, I can't grow an ounce of facial hair.
I know. I told my dad that. I was like, I got a mole removed like 2 years ago, and I was like, I kind of took a video of it because it was disgusting how like they basically sutured up the whole thing and cauterized it and stuff. And I was like, good grief, I didn't know I had that much back hair. I was supposed to get back hair when I was like 30 or 40. My dad goes, they can do transplants for that, right? Like you can just get that on your face now. So
is it even the same kind of hair?
No, probably not.
That would look very weird.
Really stringy.
Huh?
Cool, man. Well, let's jump into it. I have a list of a few questions to chat with you about the recent surge, specifically in Bitcoin, because that's what the news story is going to be. We can talk other cryptos at another time.
Totally.
But feel free to expand however much you want to, or as little as you want to on any of these. And it'll air Monday, so I can get you the piece on Monday. Okay, so in short, let's back up to kind of the history and origins of Bitcoin. What made Bitcoin so special to people and made them willing to invest in it? It wasn't, I don't think it was hot right off the bat, was it?
Totally. Yeah. So one thing that's very interesting about Bitcoin that a lot of people probably wouldn't appreciate is had been a group of people who self-titled cypherpunks who had been working on making something like Bitcoin for decades. So back in the 90s, there was actually a thriving community of people who were consistently attempting to make some form of digital cash. Adam Back famously created a lot of the important mechanisms that are in Bitcoin today, and he is currently very much involved in Bitcoin today. But I think a lot of people, it wasn't just some invention. It was something that people had been attempting to make for a long time. And what it reminds me of, so there's this sort of Steve Jobs quote where he says that you can't work from the technology to the product. You have to work from what consumers want to the technology. So you have to imagine what people want and make the technology. That reminds me a lot of Bitcoin because it is very much something that people made because they wanted very badly. So that kind of brings us into when did Bitcoin start is right after the financial crisis in 2008. It wasn't just something where somebody randomly discovered how to make Bitcoin. It was that there had been a community of people who wanted to create some form of digital currency, some kind of digital cash for a long time. And after everyone witnessed the financial crisis and what they perceived as a lot of corruption in the banking industry, and that's when a lot of people, the desire to create digital cash was totally ignited and turned up to 11. After the financial crisis, and that's when we got the Bitcoin white paper in 2009.
Gotcha. So do you know off the top of your head what some of those failed systems were that before Bitcoin that led to Bitcoin?
The number one, I only know one, and it's called Hashcash. And that was the one that was made by Adam Back in the 90s. And I don't know all the technical details, but I do know that the sort of hashing mechanism that was created by Hashcash was used in Bitcoin.
Okay.
Yeah.
Okay. So, even as it's grown up until today, it's had sharp drops. For example, 2022. Could you tell me a bit about the volatility of it and why it's jumping?
Yeah, absolutely. I mean, it's an inherently volatile asset for a couple of reasons. I think most people don't believe it'll be an extremely volatile asset for a while, but it's really, the truth is there's nothing to analogize uh, Bitcoin to, because we have never created like a brand new substance like this before. I mean, people, it's very similar to gold in the way it behaves, and it's meant to be kind of similar to gold in the way that it behaves. But humanity never witnessed the birth of gold, right? It was just there and they started using it. So, as Bitcoin, the way a lot of Bitcoin investors or people who are a fan of Bitcoin or sort of, Bitcoin acolytes will put it, is that you have this thing that was created and that it is basically a gold-like substance, although it exists on a digital medium, but it's in the process of maturing into an asset that's as big as or larger than gold. And obviously, the very idea that that could happen is so crazy that you have to be a little crazy to believe it early on. You know, and so the whipsaw in the price, I mean, to me, is more or less a product of the fact that it's a crazy hypothesis. If they're right, it will do very well, but it's a little hard to have a total confidence that it will do well because it works so differently than any other financial asset. I mean, anything that is traded for money on some kind of exchange, there's a reason that people are buying it, a very concrete and understandable reason that people are buying it. If you're buying a stock, it's because it entitles you to that stock's cash flows. If you're buying oil, it's because there's a very straightforward demand for oil in the world. The demand for oil is not going to go to zero, and the amount of money that Apple makes is not going to go to zero overnight. There's a very simple, or at least a straightforward reason as to why people would buy those. With Bitcoin, the only reason somebody would buy it is if you believe that somebody can create a new, basically money-like substance out of on a digital medium. And so, that just that kind of lends itself to a lot of real volatility in prices, because you know it is truly a speculative thing, which doesn't mean it doesn't have real value at the same time. But especially in the early days, people are speculating on whether it will have real value or whether it will get adoption. So because it's not a simple asset, I think that means that the faith people have in it can fluctuate a lot. And obviously, in respect to 2022, this is something that anybody who's sort of a native cryptocurrency investor would know, but Bitcoin has a cycle called a halving cycle. So the supply of new Bitcoin is cut in half every 4 years. And historically, since the beginning of Bitcoin, this has been accompanied in price rise and drops. So usually around the halving, the price will spike up and it will hit an all-time high, and it will climb up for roughly a year, and there'll be sort of a euphoria around its price. And then that euphoria will pop and the price will go back down. And that cycle has repeated every 4 years since Bitcoin was created. In
Why is it every 4 years?
That's just what the rules is in the protocol, is that it would be 4 years. Yeah. Um, the reason it is four is because it's divisible by two. So like the same reason that your gigabytes are always, the gigabytes on your phone are always divisible by two, or is like basically an exponent of two. That's the reason that Bitcoin works the way it does in a lot of instances. Whenever there's a random digit assigned to something, that's usually the reason why. But yeah, I mean, with 2022, the issue with 2022 is you had that same normal cycle that always happens, where you have the euphoria, where a lot of people, it's more or less an attention cycle. A lot of people pay attention, get excited, and buy it. 2022, the cycle, the sort of euphoria bubble had already begun to pop. And the problem was that the euphoria bubble in the crypto markets that had begun to pop basically caused this huge cascade of, you could say, like liquidations, where a lot of people started going bankrupt because their entire company, sometimes fraudulently, sometimes not, was based on these prices staying higher for longer. And it just wiped people out on the way down. Obviously, it started with Luna. And then a investment fund called Three Arrows Capital had invested heavily in Luna. And so they got blown up, and they had loans out to all these different people. So those people got blown up, and then the next people got blown up, and it finally culminated in FTX. And because FTX was such a forward-facing company with Super Bowl commercials and sponsorships with a lot of like big celebrities, that was very visible. And you could argue FTX was one of the most visible things about crypto to the average person, and the fact that it ended up being basically fraudulent, like an Enron type debacle, that hurt public sentiment more than probably anything had before in the crypto markets. So it's kind of a combination of the normal cycle and the FTX fraud
Right. So
that really hurt
is
its reputation.
FTX, like, is its function within cryptocurrency a place where you can trade it?
Yes, it's an exchange. So the thing about FTX is a lot of people will be like crypto's bad because of FTX. FTX literally works like any exchange. I mean, it's not a crypto, it's a centralized service. It's like any other company. There's nothing crypto native about FTX per se. It's not built on blockchain rails or anything like that. It's just a company that operates an exchange, like a brokerage account.
Gotcha. That makes sense.
Yeah.
Okay, so you threw out the word halving earlier. I know what you're
Mhm.
talking about, but for people who don't, what's a halving?
Yeah. So the halving is when essentially the way that Bitcoin works is that, not to get, we don't need to get into the technical details, but new supply of Bitcoin is introduced through Bitcoin mining. And a block is produced every 10 minutes, and every single block brings, right now, I think it's six or so Bitcoin onto the market. Every 4 years, the amount of Bitcoin that is mined with every block is cut in half, which basically just means that the new supply of Bitcoin is cut in half every 4 years. And then you get that same supply for 4 years, and then it's cut in half. And then the same supply, and it's cut in half. So the halving is just when the supply of new Bitcoin goes down by half. And generally, that has a positive impact on the price because, if there's only like $50 million of new Bitcoin coming onto the market every day, and the market is buying, a lot more than that, if you cut that supply down, it's going to make the price go up because there's less Bitcoin for the same supply, which is why it tends to have an effect on price.
The whole halving process was put in place as a safeguard to, maybe not a safeguard, but to make sure that there was some kind of scarce commodity within Bitcoin that it would dwindle
Yeah,
at some
so
point.
the supply cap was put into place for that purpose. The sort of halving, like the halving is, it's actually called the block subsidy, is the amount of new Bitcoin that goes for every block. So if you're mining Bitcoin, it's a very expensive operation, and you only receive Bitcoin in two ways. One is through transaction fees, and the other is through the block subsidy, which is those new Bitcoin that you are rewarded with for mining Bitcoin. And that number is the number that gets cut in half every 4 years. The reason this halving mechanism was introduced is because when Satoshi and the other people were kind of planning it out, and what I mean is the people on the message boards, obviously Satoshi is the creator, but there's a community of people who really brought this thing together in, working with Satoshi. But the reason is that they knew that in order to compensate people for mining, you had to give them way more Bitcoin at first because Bitcoin is going to be way cheaper, or like way cheaper. As time progresses, as Bitcoin gets more expensive, you need less of it to compensate those people. And the other thing is, hypothetically, they will start to make more Bitcoin from transaction fees. So, without really changing the protocol, the way that this stuff needs to develop in the future is that Bitcoin miners need to start making more and more from transaction fees in order to make up for the less Bitcoin that they're getting from the protocol itself. Because fast forward 100 years, people are going to be mining the last Bitcoin for decades and possibly 100 years itself. I mean, the amount of Bitcoin that you get from mining through the block subsidy is going to decrease substantially as time goes on.
So one of the selling points initially with Bitcoin was its decentralization. Do you think
Mm-hmm.
that plays into a larger group of investors buying into it now because of the state of how money is and how the dollar is these days with debt and all those things? Is there a connection there at all?
I think so. I think that a lot of people find it to be an interesting investment because of inflation. We actually saw that back in 2021 or 2020. Paul Tudor Jones had this hypothesis where he saw a lot of monetary debasement coming, in the future from the government, and for that reason, he bought Bitcoin because Bitcoin is one of the few things in the world that you can't really make more of, right? So, I mean, this was one of the reasons that Bitcoin got a lot of the big attention back in the day, was as a store of value or as an inflation hedge from a lot of these big people in finance. Ray Dalio and Paul Tudor Jones are two huge ones. They both own Bitcoin and are optimistic about it for that exact reason. Another really interesting thing is that we witnessed some fascinating behavior in the Bitcoin price early last year, where generally Bitcoin is pretty correlated with the S&P. So it's relatively correlated with the stock market. Last year, if you'll remember, when we had the banking crisis, sort of, where all of these banks were essentially went illiquid and then blew up, specifically Silicon Valley Bank. That created a situation where a lot of major banks blew up within the span of about a month. And the Fed had to introduce this bank term funding program. And a lot of people were losing confidence in banks because all their banks were blowing up. A lot of people were thinking, man, is my money going to be at the bank? Very interestingly, those stocks obviously reacted negatively. Bitcoin's price reacted very positively to that event. And a lot of people see that reaction and they think that that's kind of a canary in the coal mine for what Bitcoin's going to be in the future. Is the more people mistrust the financial system, whether it be the actual Federal Reserve printing money, whether it be the government's fiscal policy that makes us have to print money in order to fund all of our spending, or whether it be just the insecurity in the banking system, Bitcoin tends to react positively to that. So yeah, people view it as a way of exiting the system. And indeed, that's why it was created in the first place, was because you had a bunch of people who are very upset with the system in 2008. So Bitcoin was created. And then as these sort of systemic kind of ills crop back up, you see people running and hiding in Bitcoin from the system.
Something that kept popping up with the headlines that I was reading about Bitcoin surge had to do with ETFs. How does that play in?
That's a huge portion of it. I mean, ETFs make it a lot easier for a lot of people to buy Bitcoin. So ETFs do not change the investment hypothesis of buying Bitcoin, but they do really increase access to Bitcoin. And this for a few reasons. One reason is, most people with a lot of money have a financial advisor, and they talk to their financial advisor about the risk bracket that they would like to be in, and their money is managed for them. That person was never going to own Bitcoin before an ETF. They weren't going to make a Coinbase account. They weren't going to make an account with River or Swan and buy Bitcoin, right? However, now they have an ability to through an ETF. And just to illustrate how, for example, I was always telling my dad to buy Bitcoin for the last few years. I was like, Dad, you should really buy some Bitcoin right now. And every single time he would be like, I can't pull my money out of my 401k to buy Bitcoin. So I'll try to get exposure to it within my 401k, but I'm not going to pay all the taxes to take it out of my 401k to go put it on Coinbase, right? Now, people like my dad can own Bitcoin.
Because it can just go right from their 401k into an ETF.
Exactly, because for the most part, those are available in somebody's 401k, whereas previously you couldn't own Bitcoin, through your brokerage account. And I think one of the reasons this is such a big deal is, for two reasons. Now you get a lot of people who previously didn't have access to it. They have easy access to it. So a lot of the people who might have wanted to buy but couldn't can easily buy. And that vastly increases the amount of people who will be flowing into the asset. And the other two things, and this you really can't, it's hard to talk about the Bitcoin ETF without talking about BlackRock. BlackRock is the largest asset manager in the world. They manage around $9 trillion worth of assets. They have had one ETF get rejected in their entire history. They've filed for over 500 ETFs, and one of them has been rejected. So go back to 2010, 2013, there were people who were filing for Bitcoin ETFs all the way back then. So Cameron and Tyler Winklevoss famously have a crypto company, and they were filing for Bitcoin ETFs way back then, but none of these people could ever get traction. And finally, continue along, and BlackRock filed for an ETF, and really everyone was shocked, not just because they filed for it and because that really increases the odds of it happening, because these are very powerful people, but also because they began to endorse Bitcoin publicly. Larry Fink, the CEO of BlackRock, probably, I mean, this is guys, the king of index funds. This is more or less the most conservative kind of investor, asset manager that you can think of. He started going on TV and saying, this the asset's the future. Everything is going to be tokenized. Financial services are going to be tokenized. He wasn't just talking about Bitcoin. He was even talking about all of crypto, but he started going on and unambiguously endorsing Bitcoin on TV. And the reason that's important is because that shifts the Overton window for financial advisors. Financial advisors are very conservative people. There is not an industry that lends itself to being on the cutting edge of anything. They want their clients to feel comfortable, and they don't want to take risks that their peers are not taking. In that industry, it's okay if you're wrong, but as long as you're all wrong at the same time, you're not in trouble, right? But when Larry Fink, the CEO of BlackRock, goes on live television and unambiguously, strongly endorses Bitcoin, what does that do to the brains of all these financial advisors who are really the ones making decisions about people's money? It makes them think, okay, my client can have 2% in this. My client can have 3% in this. And so honestly, you've got all these things that have coalesced to create this frenzy around Bitcoin. You've got the ETF, but you've also got the change of the Overton window in the ETF that produced the ETF of financial advisors and big people in finance just endorsing this asset for the first time. And I'll tell you, that's what's really going to drive the price of Bitcoin up, is that people are going to stop being skeptical about it, because the people they take their cues from have stopped being skeptical about it. And to top it all off, they can easily buy it in their 401k.
So is that just Bitcoin that can be bought on an ETF or other crypto?
Yeah. So ETFs are approved once at a time, so they did, there were 10, I think, ETFs or maybe 9 new ETFs approved essentially for the Bitcoin. They were approved for the first time. There was a Grayscale, there was a trust called GBTC, which was converted into an ETF, but more or less, yes, a lot of Bitcoin ETFs were all approved on the same day. There are no other crypto ETFs that have been approved. BlackRock and a lot of other very large financial or asset managers have filed for an Ethereum ETF. And a lot of people assume that an Ethereum ETF is going to happen later this year. Most people, Bloomberg analysts, I think, have it around 70% chance that it's going to get approved. We don't know whether that's going to happen because the SEC is very hostile towards crypto and their regulatory style. And beyond that, generally most people's opinion about this SEC is that if they can, they'll find a reason to say no. The real question is, can they find a reason to say no? So the consensus in finance and crypto is that the ETF is going to be approved, but there's still a lot of healthy skepticism about that for the Ethereum ETF later this year.